not a 7-Eleven. If you understand the difference, you understand why Wawa NNN properties trade at some of the tightest cap rates in the entire convenience store category. Wawa is the premium brand. Better food, better fuel, bigger sites, and one of the most loyal customer bases of any retailer in America. And they're expanding aggressively in Florida right now. Here's what a Wawa NNN investment actually looks like. Wawa NNN properties trade at 4.75% to 5.5% cap rates, tighter than 7-Eleven and comparable to drive-through Starbucks, reflecting the premium brand positioning. Buildings run 12,800 to 6,300 square feet on large 2 to 2.5 acre lots, which is significantly more land than most NNN categories. That larger footprint includes the fuel canopy, multiple pump positions, and robust food service area. Entry prices are $4 million to $10 million plus. This is not the entry-level NNN category. Lease terms are 20 years initial with 4 to 6 5-year renewal options, and rent bumps of 7.5% to 10% every 5 years are standard. Wawa is a private company, no S&P rating, but treated as very strong credit by the investment community. Wawa's per location performance is exceptional, driven by the combination of prepared food, fuel, and convenience in a single destination. Customers plan trips to Wawa. That's a different dynamic than a typical convenience store, where you stop because it's visible from the road. That customer loyalty translates into sales volumes that make Wawa locations very sticky from a tenant perspective. The company is aggressively expanding in Florida with dozens of new locations per year, which creates a real BTS pipeline of prime pad sites with fresh 20-year leases. And the real estate itself, a 2+ acre signalized corner in a Florida growth corridor, has long-term value independent of any single tenant. Wawa leases are typically absolute NNN with 20-year initial terms. That's a longer initial commitment than most QSR and dollar store NNN deals. Wawa pays all operating costs, taxes, insurance, maintenance, roof, and structure. Rent bumps of 7.5% to 10% every 5 years provide income growth over the lease term. Corporate guarantee from Wawa Inc., a private family and employee-owned company. The environmental provisions on fuel properties need careful legal review. Wawa takes responsibility for environmental remediation under their standard lease, but always confirm this in the specific document before closing. 3 honest things to know about Wawa NNN. First, the cap rates are tight. You're paying up for a premium brand, and your current yield is going to be lower than what you'd get from a Dollar General or even a pharmacy NNN. The long-term appreciation thesis and tenant quality justify it for many investors, but it's not the right fit if current income maximization is your primary goal. Second, Wawa is private. That means less public financial disclosure than a NYSE-listed tenant. The company's reputation and private performance data suggest very strong financials, but you're relying on reputation and market consensus rather than SEC filings. Third, the large lot size means your land basis is concentrated in a single asset. The flip side of owning 2+ acres of prime Florida real estate is that it's a meaningful capital commitment per deal. Wawa NNN is one of the best categories in Florida convenience store real estate, and deals move quickly. If you want to be positioned when new Wawa BTS locations come to market in Central Florida, reach out now. I'm Ryan Solberg with MaxLife Commercial. Visit maxlifedevelopment.com or call 321-586-2121.